You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.
What's up? Welcome back to The Builder's Mindset. I just have one question for everybody today. One question that everyone's been whispering since Lennar's call on Friday. Can't even get through a weekend without it. Did they flinch? Or better yet, we'll talk about this a little bit more. They were grilled on, are they changing their strategy? That's the headline. Let me read you a few more though that are on going around already right now. America's second largest home builder, Lennar, says it's time to pause. I don't know what impression that gives for the majority of people who tend to not click on the link and read the actual whole article. Lennar's profit sinks as housing market remains stalled. That's the Wall Street Journal, okay? Housing, why Lennar is the proverbial canary in the coal mine. S&P 500, housing giant pins hope on Fed after profit dives. That's Investor Business Daily. I listened to the whole call myself. I usually make a point to always listen to Lennar's, and I did not get that catch from it. I did not get them pinning their hope on Fed after profit dives. And kind of the tough part about that is it depends on how you look at the profit. Profit dollars were down, yes, but we'll talk about margins in another little bit later. Housing giant Lennar looks to rate cuts to stimulate demand after earnings miss. Lennar reports lower quarterly profits as affordability pressure weighs. That's probably right there. That one right there, I would say, is probably one of the better ones. But there also was another one. Lennar, America's second largest home builder, is increasingly optimistic about the housing market. That is my favorite one. Now, why is that my favorite one? Well, we'll get into that. But all of those are sound bites. Are they changing their strategy? Are they flinching? Their profits diving? They're all sound bites. It's all clickbait. And if you live in the world of Wall Street hot takes, you probably think they did. And you probably think that the housing market is crumbling, the greater economy is crumbling, and you're probably of the same mindset of people who just are blown about by the wind when we don't have a stand on firm footing. Now, the people that I'm most concerned about, number one, are my private builders and how they respond and react to this information, as well as the general public. I was talking to somebody today about, tolls buyer not being as sensitive to situations in the market, particularly interest rates. And I said to them, well, they're not as sensitive to interest rates, but they are very wise, and they will make decisions based on how they think the economy is either doing well or not. Even if you have the money to buy a new home from someone like a toll, let's say you're a second move up or a luxury buyer, if you think it's not the right time to buy because of headlines like the headlines we just read, you're going to sit back off of the market. So my issue becomes, once again, to all of the journalists, all of the outlets, please think about the headline, because 90% of people only read the headline, and then 5% maybe read part of the article, but very few read the entire article. And that's if the assumption is, with an interaction I had with somebody on LinkedIn today, is that if I read their whole article, because I did take a little issue with their headline, they pointed out to me and corrected me and said, well, if you read the whole article, you'll see that I did address the positive data points that you're talking to. And I said to them, I appreciate that, but why can't we lead with the positives? So listen, gross margin slipped, deliveries adjusted downward, and management dared to use words like pause or ease back. Pause, not slam on the brakes. Ease back, not make a U-turn. Here's the thing though, when you actually listen, when you look past the surface, past the headline, you realize this is not flinching at all. This is smart, intelligent business operations. It's composure. They still sold, their sales were up, their deliveries were a little bit down, and they even talked about that as being timing, okay? And so they also talked about that with their sales up, 4.7 sales per community per month, okay? Yes, we look to Lennar when we look to where we think the market's headed. They do tend to set the tone, but we can't let all of these headlines that lead with the negative, like, get us in this illusion of weakness. Flinching is fear. Flinching is losing your nerve. Do we really think Lennar lost their nerve this quarter? Absolutely not, in my opinion. As a matter of fact, I really respect the machine, what they do, how they operate, and I respect how they handle the analysts on these calls. They chose restraint not because they were concerned, but because they've been running this marathon long enough to know you don't sprint every mile. You have a strategy, you pace yourself. Stuart Miller called it exactly that, a marathon. You breathe, you recalibrate, you let your body catch up to your ambition. Sometimes you do get a little ahead of yourself and you've got to get your heart rate back down a little bit. Sometimes it's hotter than you thought it was going to be because there's less cloud cover and you need to take a little bit more water intake. You adjust and still show up every mile as best that you can relative to where you're at in the stage of the race. That's how you finish a race stronger. And let's be real. If you're building homes, if you're a home builder in 2025, you already know this is a marathon. We've all been talking for some time that 2025 was going to be a challenging year. The market is testing everybody's endurance right now. In running, we say when you max out, when you redline your heart rate, like you get in the upper ends of zone 4 and zone 5, what they call it, the human body can only do that for 45 minutes to an hour. And so then you have to recover for at least 24 hours. And so if you're going out to run a 10K, and that's going to take you somewhere between 45 minutes to an hour and 15 minutes, depending upon your running pace, you can just go out and full throttle it because you're going to finish and be done. If you're running a half marathon, not even a full, but if you're running a full marathon, you have to pace yourself. And there are going to be times based on whether there are hills that you're hitting or whether the heat is different at a certain point in time that you are going to have to throttle back a tad to play the long game. So, let's think about this just like Stuart Miller said. It's a marathon. Let's get a breath. The market is testing everyone's endurance. Rates are up. Yes, confidence is down and affordability is stretched thin. The builders who panic, they gas out. The builders who pace, they last. So let's unpack the numbers that the media latched onto, and then we'll go a little bit deeper to make sure we look at the whole picture, okay? Yes, gross margins dropped to 17.5%. That was the headline. That's what got printed. And here at the Builder's Mindset, we strongly believe in trying to maintain over 20%. But we've been watching these go down, and we've been talking about Lennar they have a phenomenal balance sheet, but that print and the market, which is what everything gets driven to, caused a market cap decline of about $1.4 million, right? Think about that for a minute and think about that. Here's what didn't actually go down. Net margin actually went up to 9.2%. Okay. SG&A, their sales, their general and administrative expenses were reined in. They were actually lower. Cycle times down. 126 days, a record. Direct construction costs, lowest since 2021. 11 straight quarters of cost reduction. That's not a company slamming on the brakes. That's a company tightening the bolts on its machine, making fine-tune adjustments where they know they can, okay? If you're still able to leverage what you're doing to keep your overhead down and or decreasing and increasing your net margin, that is not, for me, wave the white flag headline time, okay? The Lennar machine isn't just a fancy phrase. It's real. It's been around for a while. It's dashboards, their data, the negotiations with trades on pace and starts, the digital funnels that get leads, a callback in under a minute. It's a home builder acting like a manufacturer, disciplined, efficient, and scalable. Really, really interesting stuff. I can't wait to see. They talked a fair amount about this leads generation and what it's doing. They're focusing on leading indicators. How do they get more appointments set? That's what they were alluding to, that this new program, this new setup they have to set more appointments. So rather than whining and complaining, they're doing things to improve leading indicators, more appointments set. Okay, that's what we should be talking about. Why? Not that I'm saying the market is phenomenal and off the charts. We've said this before. The builders who sit around and let the rising tide lift the boat and then let the falling tide take them way out away from shore should be listening to some of this. They should be listening to reduction in cycle times, reduction in direct costs through product design, getting your SG&A down, improving your systems to get more leads in the door and more appointments set. That's the story. That's not weakness. That's not flinching. That's control. Learn from what they're doing. Now, let's talk about their balance sheet. Layer on the balance sheet on top of all the positive that we just talked about there. Okay, yes, there's some down numbers. You can't have consistent growth all the time. But they've got $1.4 billion in cash, debt to cap trimmed to 13.5%. And they exercised $500 million in buybacks. Oh, and let's not forget, Buffett invested $800 million in recent months in Lennar. Does that not tell you that some people believe in the long-term strategy of home building? Absolutely it does. It's just like when friends of mine call me up and say, is it a good time to buy a home? Even if it's for a rental or if it's for an investment, it's for this, it's for that. I tell them, if you can afford to own that home in whatever fashion, whether you're going to live in it, rent it, or whatever the case may be, if you can afford to own it for 5 years, your chances of losing money are very slim. Okay? And so if you can play the long game and not the ups and downs and the hype, you're going to be fine. And that's what Buffett does. And that's why he put $800 million into Lennar. It's not survival mode. That's them exercising their muscle. That's a builder with enough ammunition to take market share while competitors are still fighting to keep the lights on. So go back to the things that they're doing well and ask yourself, am I looking at the parts of my business where I can exercise control? Can I figure out a way to funnel better leads in, convert more leads into real appointments? Can I get my cycle time down? What can I do on my product design to get my cost down so I can get my cost as a percent of direct lower? What can I do rather than sitting around and complaining and waiting for the Fed to lower rates and then hoping that creates lower mortgage rates? Let the lower mortgage rates, if they come, be the cherry on the icing on the cake, right? Time to focus, time to strategize, time to execute. This isn't a company, Lennar's not stepping back. It's a company, they're sharpening their blade before the next round. And it's like 3 quarters. Here's going to be the telltale one for me, and we'll get back on this in about 3 months from now. We get back and we do our follow-up on the next quarter. What's going to be the one for me is right now. So Lennar's 4th quarter will be September, October, and November. Let's see what their sales pace per month per community is for the 4th quarter before we scream that they're like changing strategy and flinching and losing the game of chicken with the economy. Let's focus on what they're doing now and then watch them and come back in 3 months, because we have these short cycles that we look at. But my gut, we've always said this, if you're above 3, you're doing well. If you're above 4, you're doing really good, okay? Above 5, you're killing it. And yes, Lennar was above 5. I feel that the analysts that sit on the call and ask the questions, go listen to it. You can. Lennar, I believe, always publishes the full recording. Listen to it. They grilled them. Okay, so but they were above 5, and our analysts and everybody has gotten so used to. We're still trying to wean ourselves. We're still trying to what do they call it when you when you're an addict and you're addicted to heroin or alcohol, when you're you're detoxing. We're still detoxing from the COVID days. And I mean like the COVID boom that we all just made so much money, like anybody could have made money in those times in this industry, right? So where's their blind spot? I think the analysts have a blind spot, and it's where it always gets frustrating for me. On the call, the analysts were circling like vultures over and over like literally for the first 10 to 15 minutes of question and answer period, they press, is this a strategy change? I think the first 3 analyst calls had that question in some way, shape, or form, and they kept trying to ask it in a different way. Is this a strategy change? Are you backing down? Are you blinking? Are you flinching? And so strategy change, it was almost comical, but at 4.7 sales per month in the previous quarter, that's not flinching. Like I said, let's see where they come back at. I'm willing to go out and bet, that will it be lower than 4.7? Most likely, yes. Will it be lower than 4? Highly doubt it. I don't know if I'm willing to bet money on that, but I will say it won't drop more than 1. I'm going to say it will be higher than 3.7. It'll be 3.7 or higher. And the analysts just couldn't wrap their head around what pause meant. And I felt like they were interpreting it as, for Lennar to pause, that must be the end of the world, and they must be slamming on the brakes. So here's the blind spot. They were looking for a crack in the armor. What they missed was the confidence in the voice of a company that knows exactly what they're doing. They almost got over 4% loss. Their stock was down that day, about 1.4 billion in cap. That to me is like, that's where the confidence in the Lennar team on that call, and the understanding and the knowing of what they're doing. That proves that the quarter cycle of Wall Street is wrong, okay? I remember way back in the days when Amazon was coming up, and Amazon was very clear to Wall Street. We're going to be low margin. We're not going to get the margins you guys are used to. We're going to operate on like 5% margins, but we're going to do it in such volume that we're going to impress you. And so I just wish that the analysts would get out of their own head for one quarter, one cycle, and start asking questions like, tell me more about the things that you're doing, leading indicators and blocking and tackling to navigate the waters that you're in right now, okay? And we are a little bit in uncharted waters, and I give Lennar a lot of credit and a lot of other builders credit for navigating them right now. Because when you're in control, you don't have to sprint. You can afford to take a breath and breathe, They're steadily out in the front of the pack, and they can ease up a little bit, watch the market unfold for the next 3 months, and still probably get well over 4 sales per community per month. And then the other thing we can look at is look at their incentives. I believe they said, I think it's for 14.3% a base home. Those are the 2 things I'm going to be looking to next month. Where are they at on a number of sales per community per month? What is their incentive as a percent of their sales? And then, as always, too, we'll look at their SG&A and its movement quarter over quarter, and we'll look at their net profit as a percent, okay? Market's tough. I expect builders to be a little bit soft and down on deliveries. I expect them to be a little soft and down on revenue. When you have what we've had in 2022 and 2023, it's hard to keep repeating that. But we got to step back for a second and look at the bigger picture. Housing demand hasn't disappeared, and it's not going to disappear. It's waiting and it's muted because of rates and shaken confidence. And headlines that are negative just shake the confidence even more. People still need homes. Supply is still structurally short, and rates are drifting down. So we have an issue right now, and Stuart, I believe it was Stuart, I can't remember if him or it was John Jaffe, but I think it was Stuart who alluded to the thing we have right now that is kind of like slightly uncharted territory for home builders is that we're undersupplied, but affordability because of pricing and cost is high, right? We've had significant inflation over the last 2-3 years. Even though that is in check, we're not seeing pricing come down. And so we talked about this. If interest rates come down like they have a little bit, and if that translates into more actionable demand, that could have the opposite effect that we'd like to see on pricing, right? So we're in this kind of place right now where the demand, builders aren't able to and or willing to increase the supply. They're all kind of, to be honest, most builders have been pausing for the past 3 to 6 months. And so they're trying to chew into their inventory because they don't want too much inventory, which creates less inventory, which helps keep pricing up, right? Less supply relative to demand, that's going to push pricing up. Well, when prices are pushed up in today's market with high interest rates and affordability, that creates a demand actionability problem. So it's a unique one. So I think what they've started talking about on their last call, we have to look at every single way we can get a restructuring of our cost, from our land to our land development, permits and fees, product development, the product we design. And everybody should, take a page out of the book of like their core product, I think they call it. Every builder right now should be working on a core product. What is a core product? It's one that they're so confident, so comfortable with that it will perform cost-wise to the level they believe it will be, which is a lower level than current standards, that you have a level of confidence to go after that product on certain land deals. Land deals are starting to get a little bit more aggressive. This is good news. If you're a builder who is disciplined, can drive more leading indicators of more leads and more appointments, and then you're also working on your operational strategies and blocking and tackling of cycle time, efficient design product, overall costs, and execution. So, supply, like we said, it's still short, and the only way to fix that is to bring confidence back into the market. If builders believe what they build will sell, they'll start building more. Headlines like this, not going to help that though. Once again, as I was talking to my friend who said, the toll buyer isn't as impacted. And go look at the toll numbers. See, this is what we don't talk about. 1 month ago, when toll reported their, third quarter earnings, they had really good numbers, really good sales, good margins. They're doing a really, really good job. That buyer, that more astute buyer, that's what we should be looking at overall as an industry, overall as an economy, and saying, if that buyer's comfortable buying, we're in a good place. We need to stop with the negativity, look at the fundamentals and say, like, the headwinds that the production, what I would call the entry level, first time buyer, first move up, kind of the lower price point builders are facing right now is demand actionability, and they need to just stay disciplined in delivering a good value product at the best price they possibly can. When affordability loosens, and it will, who's going to be ready to accelerate? Rates are drifting down. That will help affordability loosen up, as we've talked about. The builders are already going down to 5%, some even a little lower than that I've seen. So I think we really need about another 1.5 reduction in 30-year fixed rate traditional mortgages before we see any actionable demand. Because to be quite honest, you've probably seen the 6.12 number. That's an FHA loan, and the APR on that, the actual effective percentage rate on that is closer to 6.82. And so I think like the 30-year fixed traditional at 6.3 and a half, I think 6.35 is a better, but not everybody can qualify for that. So I think we need to see if we want interest rates to be the silver bullet, we've got to see them I'd say we got to see them at sub 4.99. But what I'd like to see first, before I kind of make a judgment on that, is if interest rates can get to 5.99, if the true 30-year fixed can get to 5.99, I think that will start to really create some interest from buyers, be them lucky loser or whatever, create more traffic. Then if you have a strategy for capturing that traffic and funneling that into real appointments, you're going to be sitting in a good spot. But you got to work on your operations. You got to work on your blocking and tackling in your product. And be ready for that. So when the affordability does loosen, who's going to be ready to accelerate? The builder with the fortress balance sheet like Lennar, so make sure your balance sheet is good. The builder with the machine already humming, is yours there? They're given the blueprint, like look at what they're doing to get that 9.2% net margin. We talk about we'd like to be double digit net, but I'm in this market 9.2. I think when you like, for those of us who like remember when college professors would always have to grade on a curve, right? Because they were so hard and the class was so hard. If you look at that 9.2% that Lennar has right now, with as a net margin with a 17.5% gross, I think that speaks volumes to their operational efficiencies. All right. So the builders who didn't burn out chasing short-term volume, and so there are some builders like, we'll see how it goes. We talked about K-Hava in the last call there. We'll see if they can weather. I think their balance sheet was in a good spot, but it's really the smaller private builders. And when I say smaller, just so you guys, so everybody knows, I'm talking about like the one division builders who are doing 200, 300, 400. They just need to make sure they don't get out over their skis from what they're putting out there to what they can sell, so they don't have a cash flow crunch. But Lennar, no issues. I have no concern. I believe they are the builder with a strong balance sheet. Their machine is humming, and they're going to capitalize off and I think they are capitalizing off the current market. So when the market starts to get back and affordability loosens, I think they're going to start to crush it. Here's why this matters beyond Lennar. Every one of us has been here. You got to take a breath. In business and in life, whether it's even in your faith journey, somebody watching from the sidelines whispers they lost their edge. If you're new to the gym and after 3 or 4 or 5 months, you get a tough spot, and you take a day or two off. If you're in your business, you're crushing your business and you're growing and all of a sudden you got to take a breather, and you don't have quite the revenue gain. It's always the peanut gallery that's looking out and whispering, "Ooh, did they lose their edge? Ooh, they slowed down a little bit. Looks like they're not as excited as they are, or they flinched, And look, at the end of the day, sometimes I've done a lot of long races, and sometimes you push a little bit harder than you maybe should have. The weather changes or whatnot. You still finish the race, but maybe you finish it not quite as fast as your original plan, but you still keep moving. But it's the folks who are not really, this is what frustrates me too, is when the headlines come from people who are analysts and who have never actually worked in the home building industry. So my challenge, though, is not to let my privates off the hook. My challenge is to really challenge you to focus on the front-end leading indicators, as well as your execution, your product development, your blocking and tackling. Focus on the things that you can control so that you can make it through this relatively unscathed and be ready to capitalize when the affordability loosens up. Okay? So those pauses, like sometimes you pause. I mean, we talk about in training for big races. Like if I'm training for a 50 miler or a 100K or a 100 miler, they're what we call cutback weeks. There are weeks when we intentionally run less miles than the week before. And so we cut back a little bit so we can take a breather, let our body recover, let us kind of get our composure, let our muscles rebuild a little bit before we go to the next level. That's where the long-term endurance lives. Sometimes the most powerful thing you can do is not give the market or your critics the frantic sprint they're begging for, right? And that's why I always respect Lennar and a lot of the other public home builders for how they operate specifically. The ones you like, your strategy, your game plan. Sometimes the most powerful thing you can do is take your foot off the gas, take a breath, and look at what's in front of you and take a quarter even to reassess, and then move forward on your terms, your game plan. That is not weakness. That is mastery of your plan. That is knowing your strategy, and that is winning your game. I like to say in any sport, if you're not a great team because you don't have discipline in the fundamentals, you can work really hard one week to look at the opponent you have coming up on Sunday and basically play to just beat them. But to consistently have a winning record, you have to have a game plan that you execute week after week after week, and you take pauses once in a while to adjust that, modify that, tweak that a little bit till you just keep getting better on your plan, playing your game by your rules. So let me answer this question very, very directly. Did Lennar flinch? No. Did they change their strategy? No. They flexed. They came out and they said, this is what we're doing. This is how we're going to do it. This is why we're going to do it. And then we're also going to be doing these things that we've been doing already. We're just going to continue doing these other things, working on our cycle time, working on our costs, working on the sales funnel to get better leads, get more appointments. That's flexing what they've already built. They showed the industry what control looks like. They proved that in a world obsessed with sprints and sound bites, the winners are the ones with stamina, patience, and the discipline to set their pace. They don't care if somebody's in front of them for a moment or gaining on them for a moment. They have the long-term strategy and vision, and I will say this again, I call it by 2030, they'll be number one in the country. I believe they'll overtake the current number one. And that's the real mindset we need in home building. Less panic, less chasing headlines, more composure, more control, more marathon, so that we can do the best we can in the race that we're in and get ready for our next race, right? So we can hopefully perform better in our next race. Because at the end of the day, the builders who know when to take a breath and how to manage their balance sheets, how to manage their operational efficiencies, their strategy, their product, those are the ones who end up breaking that tape and coming in first in the race, okay? So listen, stand down on the negativity, but I know I'm going to see probably plenty more headlines all next week, which will all come out, be perfect. Before you get to hear this episode, there'll be all the negativity about the housing markets crashing and gloom and doom, but you know how we are, what mindset we have here at the Builders Mindset. We have a gratitude, thank you mindset. Remember, once again, if you love the hat, if you're watching this on the YouTube channel, Thank You Collective on Instagram, go check out my good friends Jimmy and Haley Queen, got some great clothing, help you have that reminder of gratitude every single day. This is the Builder's Mindset. We thank you for being here. Hey, if you think there's a builder that you know who could benefit from this, share this episode with someone, with one of them, if they need to hear it. Someone who's in their own marathon right now and wondering if they're going to make it through, if slowing down means they're falling behind. Share it with them. Let them hear this. We'd love for them to get the right mindset so they can finish the race and go to the next level for their next race. Remind them, it's not about flinching. It's not flinching. It's strength. It's long-term. This is a marathon, not a sprint. We love you. Thanks for joining, and we'll talk to you next week. Have an amazing day.
You're listening to The Builder's Mindset with Mike DiGiovanni, presented by Amazing Mindsets.